Now, I am pleased to invite Jonathan Dixon, Secretary General of the IAIS, to join us on stage to moderate the session. With that, over to you, Jonathan.
Well, welcome everyone. What a wonderful way to start our annual conference 2023. I want to start by saying a very big thank you to our new IAIS Executive Committee Chair, Shigeru Ariizumi, Vice Minister for International Affairs at our host, the Financial Services Agency of Japan, not only for his support in being able to host this conference here in Japan today, but for really, as we've seen, bringing the power of a policymaker perspective to our discussions and really highlighting the key link that exists in today's environment between the protection and resilience role of insurance and key societal challenges of the day. I was extremely honored that we could be joined by Prime Minister Kishida and Minister Suzuki. The remarks remind us of the importance, yes, to the Japanese government that it attaches to resilient and stable insurance markets and the leadership that it has shown on the international stage on these issues, including at the G7. But I think it's a reflection of, as I say, of where we are collectively as a globe at the moment in terms of the challenges we face. But before we begin the town hall today, we would certainly be remiss not to acknowledge the fantastic legacy of our former chair, Vicky Saporta. This is the latest, but I would say actually also the final thank you and farewell to Vicky that we've had an opportunity to say a number of times over the course of the last few days. Vicky completed her final task as chair this morning when she presided over our AGM, and we were able to welcome Shigeru as our new chair immediately thereafter. I'm very pleased that in the association we have such an impressive senior leader with extensive international experience to navigate the important years ahead. So Vicky, thank you for such a strong and impactful contribution to both the leadership and the effectiveness of the IAS over these past 8 years. We've been very well served by your ability to navigate the myriad of complex issues and very many diverse voices to always find a way forward. And I think that's the true legacy of your time, is having found a way forward even when it was complex. And I will miss tremendously our double act as Chair and Secretary General of the IAS. Under your steer, we've been able to achieve remarkable things. Thank you. I mean, I could talk a little bit about those remarkable things, a legacy of having finalized significant reforms, like the Common Framework for the Supervision of Internationally Active Insurance Groups in 2019, the Holistic Framework to assess and mitigate systemic risk in the insurance sector, which was endorsed by the FSB last year. Under Vicky's tenure, the IAS has also been the first financial standard setter to issue guidance on climate risks, and the first to adopt diversity, equity, and inclusion as a key strategic focus, while continuing to champion financial inclusion and other subjects of particular relevance to our broader emerging market and developing economy membership, and finding and forging a way forward in an inclusive way for our broad membership is such a fantastic legacy. But there's much more I could say, but let's rather hear from Vicky directly. Vicky, would you like to say a few words?
Good afternoon. And what to say? I mean, at some level, I'm no longer the chair. We have the very gifted Shigeru Ariizumi, but it seems a little bit samey, actually. Same sort of order. And this is because the membership of the IAIS has been treating me to very, very kind farewells and has given me the floor. But from next year, the first person after Jonathan will be Shigeru. And thank you, Shigeru, for giving me the floor first. Just a few words. I took over from Felix Hufeld, who took over from Peter Braunmüller, in the period after the global financial crisis. It was a period where actually central banks and Prudential financial regulators had a lot of work to do, and they were actually leading the work of fixing the financial system for the obvious fault lines that had developed during the GFC. And I am a central banker by occupation. I've spent 27 years of my life in a central bank doing various jobs. And maybe I was the right person for the right time to take forward the association to complete standards that were robust for the internationally active insurance groups that are, of course, the cross-border groups, and that collectively their activities matter for the global financial system and for its risks, and also to try to come up with a better way of assessing systemic risk to the financial system than the first way that the IAIS had come up with, and also to make progress on the ICS. During this time, of course, we took forward different issues, but again, that have a global financial stability importance, such as climate risk. I think it's now the time to hand over also to somebody who has an even broader context, and not just a central banking context, although obviously central bankers don't operate in a political vacuum, but somebody like Shigeru, who of course is now Vice Minister of International Affairs, but has served in the Treasury for many years, and is responsible for cross-sectoral financial regulation and supervision, and has a vantage point, actually, to look at the interaction between society's challenges and the financial sector, and within that, insurance. So I'm extremely, I guess my last act, the last act of any leader, actually, is to make sure that after them, and like what Marie Antoinette, I think it was, said, there is this saying that says, après moi le déluge. This is precisely after me, the catastrophe, basically. And this is precisely what a leader should not do. And I think in this particular case, this is not at all going to happen. We're going to have great succession, and Shigeru is going to lead us to this last task of completing the final mile of the ICS, as well as moving the insurance sector and insurance regulation to addressing society's challenges. With that, thank you very much for all of your support and your friendship and engagement in our activities throughout these 8 years. It would be remiss for me not to thank again the Secretariat, Jonathan in particular, my partner in crime, Romain Passereau, all of the members of the Secretariat. They're really a fantastic team. But also, if I may say, so my own team at the Bank of England that actually also did support me in doing this role. So, with that, I would like to hand over to the new IAIS chair, Shigeru. The floor is yours.
Thank you very much, Vicky, first for your very kind words, and hello, everyone. And it is just an honor to take up this new role and to welcome you to my home city, in particular to welcome both my Prime Minister, Prime Minister Kishida, and our Finance Minister Suzuki, to our proceedings today. Following Jonathan's path, I would like to take a moment to thank you, Vicky, in person, for your significant contribution to driving forward the IAIS work as the chair of the executive committee for the last 8 years. I've seen up close your commitment to fostering cooperation and collaboration among the supervisory community. And I also think that you are a great leader, but a great leader has certain qualities, I think. And the two things that come to my mind is the ability to get everyone together. And I think you have excelled in that role. There are some turbulent times, of course, even among supervisors and regulators, but you have always been able to gather everyone and to find a path that is agreeable to all members. And I think that's the utmost quality that I admire so much. The other thing that I think would be very important for leaders is to have the commitment and the dedication to lead the institution. And here too, I think you have shown that you are an exceptional leader with all the work that you have back at home. You also were in charge for the Basel Committee. And I think given your workload, you had spent so many hours, so much time to lead the institution. So let me thank you for that. And I would like to, of course, build on Vicky's legacy. And I'm here to express that we expect a significant continuity on the issues you have championed over your tenure as a chair, and some of the ones that you have explicitly mentioned as well. So thank you very much. And thank you also to Jonathan for your warm words of welcome. This is my first town hall as chair of the IAIS Exco, but not the first time. As many of you know, I have been in this setting given the previous 2 years as vice chair. I will keep my remarks short this afternoon, as the purpose of this town hall is to have a dialogue with all of you. But let me just briefly touch upon 3 key issues which I think would be relevant. Number 1 would be the ICS, as Vicky mentioned. We are at perhaps the last mile. Last mile is always challenging, but we will work on this. Number 2 is the role I see the IAIS playing in ensuring the insurance sector can deliver on its commitment to society. There has been some mention from our Prime Minister about the societal role of insurance, and I think that's a very valid point that we need to focus on. And number 3 is the work we are doing to develop our 2025-2029 strategic plan. So let me first turn to the ICS. We will have an ICS panel tomorrow, but finalizing the development of the ICS by December next year remains a resolute focus for us. As mentioned, our consultation in June and the progress we have achieved since place us right on track to achieve this important goal. In Japan, we are committed to the implementation of ICS in 2025, and therefore I am pleased that in my new role I'll be able to continue to advance this international effort. As chair of the IAIS, I also have a responsibility as vice chair of the IOSCO, the International Organization of Securities Commission, and I'm also the member of the Financial Stability Board. And I would like to leverage my experience, what I see there, to enable, to foster a comprehensive discussion in the IAIS context as well. I mentioned about societal challenges, and here I think there's a clear call to action to address protection gaps. And this is why I have been particularly keen for the IAIS to pursue this topic. And as you have seen already, publicly published already, is the key deliverable this year is the report on the role of supervisors in addressing NatCat protection gap. We hope that this report will facilitate discussions among not only insurance supervisors, but also the insurance industry, policymakers, and relevant stakeholders on how to narrow the protection gaps. So we look very much forward to implement, to make it into action for all supervisors to help narrow down the NatCat protection gap. And I think this is important for all supervisors, regardless of their mandates. In relation to that, I also like to emphasize that we believe that stakeholder engagement would be extremely important moving forward. The issues require many of the issues will require multi-stakeholder approach. And I think the IAIS would benefit from such kind of a stakeholder engagement. That is why we are working currently right now on the stakeholder engagement and consultation policy. And that is why we are working on the public consultation process right now. And we will publish the final version in the coming weeks. And I am grateful to the stakeholders that responded to the consultation and welcome a broad support on the key elements of the policies. The policy builds on a solid foundation of established stakeholder engagement, but recognizes that to reach a wider range of stakeholders, it is important that the IAIS continues to innovate in the way it engages with stakeholders. In response to the consultation feedback, we have agreed to longer consultation periods in certain circumstances, to deepen our engagement with stakeholders, and to increase our transparency. And we are working towards a more closer communication, engagement with our stakeholders. Last but not least, over the last few months, we have intensified our efforts to develop our 2025-2029 strategic plan. And this is particularly important to set the stage or set a medium-term strategic plan, which enables us to move into the right direction against the background of ever-changing challenges that the insurance sector will face. And here, we think that will be important to focus on the implementation and capacity building. We expect a period of relatively stability in our standard setting, we hope. And this would enable us to focus more on the implementation and capacity building. And here we need to engage in a way that we could be moving towards a more improved insurance sector. The engagement to date indicates that members and stakeholders do not feel that the current core functions, what we call the high-level goals of the IAIS, need to fundamentally change. Although with the way we arrange ourselves and prioritize ourselves may change in the coming period, we are still seeking for input on our future direction. And I'd encourage you to sign up for our 2 roundtables on the plan, which will take place tomorrow. So with that, I will end my remarks, and I'd like to welcome my EXCO colleagues to the stage, including Vicky, for one last time. So thank you very much.
Okay, excellent. It's wonderful to be back here again for another town hall discussion. And as we said, this is one of the sort of highlights of our stakeholder engagement. Each year we get to engage directly with so many of you. And wonderful to be joined by an excellent panel of EXCO members today. So we have a series of questions that I'm going to ask to the panel first of all, touching on our various areas of work, just to give all of you today a little bit more of a sense of where we are and where we're going with the IAIS work. But I also want to remind you that you can also ask questions using the Slido Q&A tool, which was shown up on the screen earlier, and I will do my best to weave those into the conversation as well. And then we'll have some open period for questions and answers at the end as well. So let's kick off, and let's first touch on one of our sort of starting points, if you like, for our work, which is around assessing risks in the global insurance sector. And I will kick off with our chair of our Macro-Prudential Committee, Dieter Hendricks. And Dieter, the global, this current situation where we have a global financial market where sentiment remains fragile, high degrees of volatility, uncertainty. And we know one of the themes the MPC has been considering this year is how insurers are managing these risks, interest rate risk, liquidity risk, credit risk, in this challenging macroeconomic environment. What can you tell us about this work?
Okay, yeah. Let me see. No. Yeah, okay, sorry. Now, what can I tell you? I can tell you a lot, actually, but I'll try to keep it short and comprehensive. Also, I don't want to spoil yet all the secrets, because there's a panel later today exactly also on this topic. Now, what are we looking at under this risk team in scope of our global monitoring exercise? First of all, we try to look into the dynamics of the current macroeconomic environment and the financial markets. And you've explained it very well, Jonathan. The dynamics are quite volatile, quite a lot of things happening at the same point in time. And the key is to understand the interactions between the different risks, rising interest rates, liquidity pressures, increasing credit risk, etc. And of course, for IAIS, it's important to try to understand what that means in terms of impact on the global insurance sector. Now, we look at each of these risks individually, but as I just mentioned, it is also key to understand how the combination of certain of these risks particularly could impact the global insurance sector. Now, in terms of a brief summary, on the positive side, we do see that rising interest rates, for instance, after a long period of negative, even lower, even negative interest rates, has given some relief to the global insurance sector. We see a positive impact for many insurers in terms of solvency position. We see also positive impact on profitability. And again, I've mentioned this before, the insurance sector at global level has shown to remain resilient despite this challenging macroeconomic and financial environment. This doesn't mean, however, that we're not looking into certain risks which we do believe could be significant for the insurance sector. Allow me to mention some of our key attention points in that respect. First of all, when you look at the rising interest rates, we do have to recognize that this can also lead to unexpected cash outflows. And there are two dynamics here which we usually tackle under the realm of liquidity risk. First of all, we see an increase on surrenders on certain markets. And that's something we've mentioned before. There are many different factors determining these surrenders. So we see an impact of the digital environment on the surrenders, or the potential speed of surrenders caused by this digital environment. Also, the distribution channel seems to play an important role in determining the level of surrenders. And all in all, it means that lapse risk under a scenario of increasing interest rate could be relevant, in particular for certain life insurers. Next to that, and that's another aspect of liquidity risk, are the unexpected cash outflows that may be triggered by margin calls for those insurers that have derivatives related to interest rate risk management. So this brings two elements together that pinpoint to the importance, again, of a sound liquidity risk management, which needs to come, I believe, on top of a sound asset liability management. Then another aspect of the rising interest rates, not so much related to liquidity risk, but more in the realm of credit risk and in the realm of real estate risk, is the fact that these rising interest rates can put some pressure on debt sustainability on the one hand, and on real estate prices on the other hand. And we know that insurers are very important investors in these markets, so both in terms of bond portfolios, for instance, but also in terms of real estate portfolios, mortgage loans, etc. So it is key for us to understand that when these things shift around, how that can impact the insurance sector. Now, given all this analysis, I think so far, as I said before, the insurance sector has remained resilient. We do intend to increase our monitoring to make sure that we do not miss any trends in this respect. And allow me to give a few examples of that. So on surrender and liquidity risk, it is recognized that both via off-site and on-site supervision, we need to continue our monitoring efforts. And this also includes sensitivity analysis, stress testing, also in the area of liquidity risk, where many supervisors are gaining first experience. And where also at the IAIS, we have in the meantime developed our framework that helps us to monitor liquidity risks. On credit risk, again, I need to mention stress testing, or the importance of stress testing, but also the fact that at the level of IAIS, we're trying to develop what we call auxiliary indicators. Those are indicators that aim to help us give a comprehensive overview of what is happening in terms of credit risk across the globe. And the data that we gather to feed these indicators will hopefully help us to make sure that we have a continued comprehensive follow-up. And last but not least, and here in this case, I think we mainly target those insurers that have a significant real estate or mortgage loan portfolio. It's also something we continue to closely monitor, and we have had conversations with many supervisors that flagged to us that they've increased, for instance, their on-site inspections in order to help them understand, for instance, how real estate portfolios, how mortgage loan portfolios are valued. I can stop here for now, Jonathan, and I hope this gives a brief overview of the many things we are doing in this area.
Great, excellent. Thank you so much, Dieter. And let me now turn to Daniel, the chair of our climate risk steering group, because one of the elements that we've been collecting data on as part of our global monitoring exercise is information on risks from climate change. And so, Daniel, can you give us a sneak peek on what we're seeing in this data and that we'll be reporting on at the end of the year in our global insurance market report?
Yes, I'll be happy to. Thanks, Jonathan. So this year, the analysis is complemented by data not only from insurance supervisors at a sector-wide level, but also by data provided by individual insurers. So these additional contributions and effort put in by the relevant jurisdictions and your insurers and many of you here in the audience is very, very much welcome. We continue to see rather material exposures and holdings of climate-related assets in some parts of the world. And comparing against last year, these have remained quite steady. But in some regions, there has been a slight increase. But I will also want to emphasize that the increases can be largely explained by improvements in the granularity of reported asset splits and the increased sample coverage, and not necessarily the result of any actual shift in the asset portfolios of insurers. Beyond historical data, we are also actively considering climate-related risks in a forward-looking manner. So you will see in this year's GMA Climate chapter, new quantitative information on the expected losses relating to natural catastrophe events. So a number of supervisors, as you well know, have already set risk-based capital requirements for net cat risks to ensure that capital resources are appropriately allocated to cover this risk. So based on the net cat data received from quite a few individual insurers, we have estimated that immediately following a 1 in 200 year event, insurers' capital coverage ratios could decline on average by approximately 1/3. So this highlights the urgency of taking action, and it's a useful indicator for supervisors to engage their insurers on doing more to become much more climate resilient. Just to take a step back, what is precious about the GME data collection and the GMA Climate Report is that we have a comprehensive view of climate-related exposures for the global insurance sector, and now for 3 years running, which we also share with external parties and certainly with the Financial Stability Board. So personally, I don't think we have that kind of trend analysis and breadth of data-driven insight in all areas of the global financial sector. So this is quite precious. So the IAIS is not resting on our laurels, and we will continue to want to refine our climate data fields, even as our members and our insurers, like yourselves, likewise improve their reporting frameworks and data disclosures. So I'll pause here.
Great. Thanks, Daniel. I think some very good insights there this year. Now, before we move on, one last area in this space is that an additional focus of the MPC's assessment work this year has been on structural shifts in the life insurance sector. Dieter, maybe you can share on what are the issues that you're focused on here.
Yeah, thank you, Jonathan. Not the easiest risk team. What we've seen that it's not been easy for life insurers the last decade, I would say, and of course the recent period of low interest rates has contributed to that. This has undoubtedly triggered some of the structural shifts we've seen so far today on the life insurance market. And what we do at the level of IAIS is currently focus on two, I would say, sub-themes that have certain characteristics that contribute to these structural shifts. A first sub-theme here is the fact that we zoom into alternative asset investments. Why are we doing this? Because we see that the use or the investments in terms of alternative assets are increasing across the globe, I would say. And for some life insurers, it's getting quite material. Now, alternative investments are usually associated with higher liquidity risk and higher complexity in terms of risk assessment, for instance. And of course, some of these trends were very understandable in an environment of low yields. We do seem to observe that these trends continue today, even if interest rates are increasing. And with these increasing interest rates and the interaction also with the monetary policy environment, it is important for us to monitor whether new risks could emerge here and how the investments in alternative assets could interact with all of that. Now, usually we do recognize, of course, that insurers apply a buy and hold strategy, trying to match their assets and liabilities. We do have to recognize that in case of a liquidation of assets, be it, for instance, as I illustrated before, because of surrenders or margin calls, then these alternative assets may be more difficult to get sold. And that brings some challenges, which then again are related to our liquidity risk theme, which I mentioned earlier. Additionally, I've highlighted already shortly, there is a certain complexity in terms of valuing these alternative assets. And sometimes for us as supervisors, also a lack of transparency in understanding how these assets are valued. And it's in this area that, of course, we need to stress that when insurers would be increasing their exposure to these alternative investments, that they have an adequate understanding of what they are doing and that the risk management is up to standards to cope with the extra challenges that we see when investments in alternative assets happen. Under this risk sub-theme, we will continue our monitoring going forward. We will also try to identify which are the common characteristics, principles of these alternative assets, because I've mentioned now a lot this terminology, but what we do notice is that the definition of what is an alternative asset is not exactly the same across jurisdictions, across supervisors. And trying to have a common understanding here is key if we want to continue our monitoring and make sure that we grasp what is happening in a correct way. And linked to that is also increasing our understanding of what I mentioned earlier, of how these assets are valued. Now, another sub-risk theme under this structural shifts theme is the increased use of asset-intensive reinsurance. Now, what is asset-intensive reinsurance? It is reinsurance whereby a material part of the investment risk is also transferred to the reinsurer. Why are we focusing on this? First of all, because we see it's increasingly used. So as with the alternative assets exposures, also the asset-intensive reinsurance transactions are increasing. We see that they are often concentrated in certain jurisdictions, and this is true both from the cedent side and the reinsurer's side. And this has, in certain circumstances, also raised some concerns to the extent that we see that certain of these transactions are set up to benefit from differences in the supervisory systems. When you see also that these both trends are happening often together, so an increase in alternative assets on the one hand and an increase of asset-intensive reinsurance on the other hand, it is a challenge for us as supervisors to have a good grasp of this, to try to understand some of the complexity. Some of these asset-intensive reinsurance transactions are quite complex to understand. And when you get into the detail and try to understand, for instance, who's managing the assets under this contract, who retains the assets, which jurisdiction has final supervisory authority, you do see a lot of differences in these contracts. And it's very key for us as supervisors to have a good understanding of these differences. So what we'll be doing under this sub-risk team is trying to continue our monitoring again, and this will necessitate additional data sources. And we are also exploring the use or the potential use of external data sources here to make sure that we get the information we need to understand these transactions. It will also necessitate a better or an enhanced information exchange between us supervisors, and in an attempt also to improve an effective and set up an effective supervision of these reinsurance transactions. And we will also question some of our own supervisory material. We will, for instance, take a look at ICP 13 on reinsurance and see if it's still up to standard, in line with, or can help to check if it can help us with these transactions as they become more and more complex. I'll stop here, Jonathan. Thank you.
Thank you very much, Dieter. And I think in the interest of time, let's move on now to the policy work that we do. And Vicky, not only are you past EXCO chair, but you're now also past ICS task force chair as well. What can you tell us about the health of the project that you're handing over? I mean, there's been a lot of work on ICS and also the AM comparability assessment. Do you want to update us on that?
Yes, happy to, Jonathan. So we are moving full speed ahead with the final steps to develop the ICS. In June, we published the consultation on the candidate ICS as a PCR, which is a key milestone in finalizing the standard. And we are grateful to those that have responded to the consultation, and we're currently carefully going through the results. Given our focus on evidence-based policy, the candidate ICS as a PCR, prescribed capital requirement, forms part of this year's ICS data collection, along with the continued collection of ICS version 2.0, which we launched at the end of 2019, to assess the impact of the changes made. We will also perform analysis on one more year of data next year before the ICS is finalized in December. Last month, the IAIS published a statement announcing the beginning of the aggregation method comparability assessment with the ICS and clarified the basis of the exercise that is conducted between the candidate ICS as a PCR and the provisional aggregation method. The recent statement brought together associated publications by the IAIS, which is, of course, developing the global standard, the ICS, and the NAIC, which is developing the aggregation method, to ensure complete transparency to all stakeholders of what we are comparing. This ongoing comparability assessment will be robust, technical and evidence-based analysis of comparability between the aggregation method and the ICS, using the agreed comparability criteria that we have agreed and that were designed to neither preclude comparability nor at the outset, nor give, of course, a free pass. The assessment is undertaken by an assessment team led by Jonathan, consisting of technical experts within the IAIS Secretariat, representing geographical diversity and expertise in both the aggregation method and the ICS. The comparability exercise would be finalized by the end of 2024. But I should say that the assessment team is front-loading quite a lot of the work, given the fact that we need to launch the templates for the final ICS in June next year. And if the US states and the NAIC so wish, they will need to launch updated templates of their updated aggregation method at the same time. So we definitely need to front load the work, and that's exactly what the Secretariat are doing. And I should add that at the last ICS task force that I chaired on Tuesday, we already got an update on these matters, and the work is going full speed. Now that I've got the floor, there is another element that is important and deliverable, which is actually the responsibility of the ICS task force to deliver, which is the economic impact assessment. So we received actually on Tuesday a report on the stakeholder responses to our questionnaires, to our questions on the economic impact assessment. And we had a discussion around that particular input. But the idea there is that we will take the responses to the consultation of the ICS as a PCR that we consulted on in June, and the economic impact assessment informed by the stakeholder responses, and we will use these two inputs to finalize the ICS, launching the templates to volunteers in March and the templates to the world with a specification in June, and then going ahead and finalizing for December. Thank you very much.
Thanks, Vicky. And more on the ICS in tomorrow's panel. So let's move on now to other areas of the policy work, and in particular, important work on operational resilience. And a little bit earlier this year, we published an issues paper on insurance sector operational resilience. Maybe Matt, as chair of our policy development committee, can you tell us what's planned next on operational risk?
Sure, happy to take that. And first, it's nice to be here and to see so many familiar faces in the audience, although I have to say those welcome remarks are a bit of a tough act to follow. I'm happy the room is still relatively full after that. You may reconsider that, as I have to start with a bit of a little legal disclaimer and say my views today are my own and not the views of the rest of the Federal Reserve Board. So on operational resilience, the issue paper issuance earlier this year actually represented the completion of all the work we had previously planned on that. We had picked up a few aspects of operational resilience coming out of the pandemic, particularly cyber risk and business continuity planning. So we finalized that, and the conversation immediately turned to what's next. Discussions at the IAIS were very much that there should be a next step on this. Supervisors around the table were unanimous in seeing this risk as both important and increasing, particularly the cyber risk aspect. You don't have to look far in the news to see stories on cyber risk. We took an important next step on this during these meetings in Tokyo. I'm excited to be able to announce that we've converted the Operational Resilience Task Force into an Operational Resilience Working Group. Along with that, we sketched out what some of the next steps will be. Well, first, for those of you that aren't deeply familiar with the IAIS vernacular on this, the difference between a task force and a working group is that task forces are set up to accomplish specific tasks and they're time limited. The working group and the conversion to it represents a more indefinite structure. It's relatively permanent. As far as next steps on the work, we're going to start out by looking at an application paper on setting some objectives to accomplish in this space, and then come back and develop a toolkit for helping supervisors accomplish these objectives. This is all in the realm of an application paper. At this point, no changes to ICP or ICPs are envisioned, but stay tuned for more from us on this in this area.
Thanks, Matt. Of course, another very important area of our policy work recently has been on climate risk, where a lot is happening. So I'm going to go straight to you, Daniel, to tell us a little bit about that.
Thank you. So we are continuing our work to help supervisors incorporate climate risk into all aspects of supervision and thereby promote a globally consistent approach. So following the first consultation published in March 2023, on the CRSG side, we will be publishing a second consultation later this month. So this consultation will cover guidance for supervisors on two issues, conducting climate scenario analysis, as well as on the risks of greenwashing and market conduct issues relating to climate-related risks. The third consultation will be issued next year, and this will cover issues such as valuation and enterprise risk management. So through these consultations, the IAIS will seek to provide an updated and more comprehensive application paper on climate risk by the end of next year. So one key feedback received on the first climate risk consultation was on the role of supervisors in transition planning. And some of you may know since then, some insurance supervisors are embarking or have already developed supervisory guidance on transition planning. And at the IAIS level, this is, of course, something we are closely monitoring and taking seriously. The UNDP Sustainable Insurance Forum is doing some work on this. And at some point in next year, on the CRSG IAIS side, we will look to see where we can contribute and potentially explore joint work. Following the publication of the International Sustainability Standards Board's Climate Disclosure Standard, at the CRSG, we have also established a disclosures workstream to look into two key areas. First and foremost, to support IAIS members on the effective implementation of sustainability disclosures and potentially regulatory reporting frameworks. Second, to provide capacity building where needed for supervisors as they engage with insurers on disclosures. And through both areas, to also explore the development of relevant climate matrix for the insurance sector. We have already engaged with a range of stakeholders on these issues, gained very much valuable insight from yourselves and our fellow colleagues in the supervisory space on the practices as well as on the challenges surrounding climate risk reporting and disclosures. And the team will put down their insights into the deliverables that I have mentioned going into 2024. Since the CRSG was set up 2 years ago, we have also extended capacity building support for our members with a focus on our colleagues from EMDE countries, such as through a series of scenario analysis workshops. So as we develop our work plan in the coming years, as alluded to by the Chair and the Secretary General, we will consider together with key partners what are good ways to provide further support for our members in this area, because climate work is something that I wish all 200 members consistently get involved in.
Great. And of course, we heard it already that an important part of our work this year has been about natural catastrophe protection gaps. But we do have a panel on that, in fact, just not too long after this. So we won't go into detail, but Shigeru, as chair of that task force, perhaps you'd like to say a little bit about the future work on protection gaps.
Sure, thank you. Jonathan, I'll be very brief. I think the PGTF highlighted real interest among members to address the issue of protection gap. And I think there's continued focus for NatCat protection gap in the first instance. So it's not just about putting together a paper or report, but actually to how do we actually put that into action or implement what we have put forward in the paper with a multi-stakeholder approach. So that's one thing that I like to mention. We are also aware that there are other gaps that might be interesting to look at, but we haven't really decided at this point in time what we actually do, but we will continue to reflect on that point as well. So let me stop there. Thanks.
Yeah, thanks. And certainly I think that question, the last question about what next, is also very linked to our strategic plan discussions, which will run from now until the middle of next year. So I think have more certainty by the middle of next year. I also want to reflect, there's been a couple of questions on the Slido that probably relate to the protection gap space, asking about thoughts on parametric insurance as a solution to NatCat protection gaps, opening up reinsurance markets as a solution, part of the solution to NatCat protection gaps, and what are supervisors thinking about that? I mean, very shortly, I think we can reflect that in our report, you'll have seen one of the 5 action points we talk about is creating an enabling supervisory and regulatory framework, and that relates to things like parametric insurance and reinsurance, and you know, looking at the opportunities that provide, but also being very, of course, as supervisors, very mindful of some of the potential risks that some of those actions can present as well. So just to respond that is mentioned in the report, but this may come up some more in the panel. Good. I think let's then move on to another very important area of our work, which is around implementation, capacity building, implementation assessment, stakeholder engagement, member engagement. And we've been doing actually more and more work in the space of implementation assessment. So seeing how our members are implementing our IAIS standards. And Peter, would you like to talk a bit about that?
Of course, pleasure for me. Just to try to put a busy year into a brief summary. Of course, we have heard a lot about what we have achieved in the standard setting area, and it's not surprising that sooner or later this ends up in implementation assessment work. So, and again, not surprisingly, the focus was very strongly again on the implementation of the holistic framework for the identification and mitigation of systemic risk in insurance. So in April this year, we could publish the aggregate report on the targeted jurisdictional assessment of the holistic framework. This TJA assessed the implementation of the holistic framework supervisory material in 10 jurisdictions with major insurance markets. And I have to say, overall, the TJA results demonstrate a strong implementation of the HF standards with good levels of observance across many of the standards. However, the results also pointed out some areas of observance that warranted further attention, and therefore, consequently, we launched a progress monitoring exercise this year, which assessed how these jurisdictions have been addressing those gaps identified in the TJA process, and notably in the areas of recovery and resolution planning and plans, resolution powers, liquidity risk, and macroprudential surveillance. The outcomes indicate that overall jurisdictions are making good progress in addressing most of these gaps, but some more work still has to be done. So that means we will also continue with that work on the holistic framework supervisory material. And the plan now is to extend the assessment of observance to 6 additional jurisdictions next year, and to do a further progress monitoring exercise in 2025. Briefly then on 2 other areas of the implementation assessment. So having put a lot of emphasis on that, it doesn't mean that the other work is becoming less. We have just launched a new peer review on ICP 16, which is on enterprise risk management for solvency purposes. And the outcomes will not only show the level of observance. I want to stress they will also provide illustrative examples and support member implementation efforts, especially on implementation of risk-based solvency regimes. So kind of peer benefit for other jurisdictions from those, even from that assessment. And finally, on the member assessment program, which provides a comprehensive assessment of the observance of all ICPs in a specific jurisdiction. It helps our members to understand how they advance in the implementation of IAIS standards. And we were able to conclude mid this year the member assessment program of Albania, and we are now in the initial stages of the next MAP, which is on the Sultanate of Oman. I stop here, Jonathan.
Thanks, Peter. Now, see, I mean, in my remarks earlier today, I spoke a little bit about our enhanced engagement with our very broad membership, and particularly our members from emerging market and developing economies. You, of course, are EXCO Vice Chair with specific responsibility for EMDE member engagement. Can you tell us a bit about the developments since we last met in June?
Yes, thank you very much, Jonathan. Hi, everyone. Very happy to be here in this incredible city of Tokyo. Actually, we continue to ensure that EMD jurisdictions have a strong voice at the IAIS, with thanks to the Financial Stability Institute and the Access to Insurance Initiative. And of course, our partners in the region have a strong regional engagement, which allows us to consider a range of issues that have a more regional perspective. So we have also recently considered additional support we can provide to EMD to enhance support on climate. As Daniel said, as also you may know, climate risk is a high on the priorities for all our members, but EMDs are likely to be the most negatively impacted by climate risk, but at the same time have fewer resources to respond to these risks. We are considering how we can work with the partners, such an academic institution, or E2II, International Actuarial Association, IDF, Global Risk Modeling Alliance, Global Shield, to increase our support on these issues, notably on developing climate risk methodology and tools tailored to member-specific climate exposure. Earlier today, we held a roundtable together with the International Actuarial Association, which considered the role actuaries have to play in supporting the development of effective insurance supervision. This, of course, is a particularly important issue for EMDs. Last but not least, our forums continue to support the inclusion of members with over 80 supervisors from 37 jurisdictions, of which significant are from emerging markets and developing economy. Here, the work of the Risk-Based Solvency Implementation Forum is worth noting, which facilitates exchange on practical aspects of implementing risk-based solvency regimes and is developing members-only guidance to support EMDs in their journeys. The Financial Inclusion Forum continues to address key issues and development impacts in financial inclusion, including from the EMD perspective. So, Jonathan, I'll stop here, hand it back to you.
Great, thanks very much, Siam. And I think a last question before we turn to the Q&A part of things, and we heard about our forums and how they're a platform for exchange of supervisory practices. Of course, a very important area for that is on fintech. And Petra, you're our fintech champion within EXCO. Can you tell us a bit about the work of the fintech forum?
I would love to, and it's great to be here and see you all in the beautiful city of Tokyo. But it's also great to chair the FinTech Forum, which is a growing forum with more and more members at the table, sharing what they see happening in their markets on digitalization. We're supervisors, so we then share the concerns we have or the risks we see and how we act on that. And that is broad. It ranges from of course, topics like crypto, those small blockchain and other data related new technologies. But the core focus this year of the FinTech Forum was on AI. Which I hope does not surprise anyone in this room. I think insurers are actually well positioned as having been working with data already for decades on using these new technologies. There are definitely opportunities to be more efficient, to serve more consumers, serve consumers better, but there's also, of course, risks and challenges. And so what we did this year was we did a thematic review where we asked supervisors what do they see currently in their market, and what do they also expect to see, or what do they see developing. In that stock take, we specifically focused on model risk management. How is that done in order to also collect already practices that are coming into being on how to supervise this. We did a check, of course, to the ICPs. We feel the ICPs are fit for purpose, but they're also not as practical as sometimes supervision needs to be. What we will do, first of all, is draft a report on our findings, which is an internal report, but conscious of the interest also with stakeholders. We plan to also have a briefer report summarizing our findings that we hope to share at the end of this year. And then we will continue within the FinTech Forum with working on a first application paper on AI, on how to supervise AI, where we really want to bring together the good practices we see and that we can share naturally in an agile way, because this is a developing, an area that constantly develops. But clearly there's also a need when these developments are happening that supervisors not only learn from each other, but also try to harmonize to the extent possible through that learning and that exchange. And we will continue doing so in 2024.
Excellent. Thanks. And let me take two questions from the Slido before we move on to the floor Q&A. And Gary, the first is for you about as you know, our consumer representatives that we have as important stakeholders in the IAIS have asked for, have really requested that we continue to deepen our engagement with consumer representatives. I'm personally very happy that we've made some good progress on that, and maybe you can talk a bit about what we've done in the last year.
Yeah, sure. Happy to, Jonathan. And as my colleague Matt said, it is really nice to see everyone. And it's great to be here in Tokyo. And thank you to Shigeru and for the JFSA, who have been incredible hosts, and June, who's somewhere in the audience, I suspect, who has been working overtime, in addition to his normal job, to MC dinners last night, and did an excellent job. So thank you for being such great hosts. I must admit it's a little jarring. I was okay with the 4 TVs up here when it was everyone else on there, but now I'm seeing myself and it's a little unsettling. Like Matt too, my views are also not of the Federal Reserves. I kid. We're very lucky as state regulators to have such a good partner in the Federal Reserve. Laura and Matt, who lead the group, we're really fortunate. So as to the question, Jonathan, as supervisors, one of our critical missions, and for many of us, there's a dual mission on prudential or solvency and conduct or consumer protection, whether that's housed in one authority or a couple of authorities. The mission remains the same, and is the ultimate goal for us as supervisors to make sure that society and the policyholders, the consumers, are protected. And as Jonathan, as you noted, we've done just this year, we've had some very good engagement with consumer groups, both members of the EXCO team and with the Market Conduct Working Group. And part of this, we want to ensure that we have strong consumer voice in everything that we do. And I'll just note 3 separate engagements that we've had with consumer groups this past year. Back in March, we had an initial scene setting call with the consumer groups, and essentially to identify the issues that we should be focused on. Then in April, a follow-up with 15 consumer representatives met with the MCWG and discussed consumer vulnerability and disclosures, and sought input on our NatCat protection working group. And then most recently, just in September, the EXCO leadership had a very useful call with consumer groups in advance of the Exco retreat that we had, where we consider issues related to AI, protection gaps, and climate change, among a host of other issues. And then, of course, we've invited a range of representatives to speak at our meetings. For example, and I think a few have mentioned this, tomorrow, there is a dedicated panel on customer-centric outcomes that picks up on a lot of the recent engagement with our consumer groups, as well as a roundtable on emerging consumer risks that include 2 consumer representatives, and it's focused on consumer issues. In addition, there are a number of planned discussions over the course of the 2 days of the annual conference where there will be a consumer perspective. Just as a few examples, the Financial Inclusion Roundtable is one of them. It's focused on increasing consumer protection, or participation rather, in insurance markets. Another example is the NatCat panel and the Protection Gaps Roundtable, where we'll consider how to address protection gaps, which obviously is a key issue for consumer groups. And then lastly, the Strategic Plan Roundtable, where we're keen to get input on the plan from our consumer groups. So we, of course, consider the consumer perspective across all the work that we do, and are taking active steps, as you mentioned, Jonathan, to further increase and better our engagement with these groups. So with that, I'll pause there.
Great, thank you. And then the last Slido question before we go to the open floor Q&A is really asking where we are with our diversity, equity, and inclusion work. So I am going to keep my fingers crossed here that we still have Jerry Cross, our Exco DEI champion, with us online, virtually. Excellent. Hi, Jerry. Thank you.
Hi, Jonathan. Good evening. Good morning from Europe. And apologies that I'm not. I would love to be with you in the wonderful city of Tokyo, but unfortunately there's a clash with our Central Bank of Ireland annual conference. So apologies. But thank you for the opportunity for speaking to the question there on progress on diversity and inclusion and equity. And look, I think it's been a very exciting and productive period as we have deepened our implementation of that IAIS strategic theme of diversity and inclusion and equity. We have, I think what's been very rewarding is that as we have progressed over the past year, we have really managed to achieve a much more effective and stronger focus on the outcomes that we are seeking to achieve through that strategic theme. In particular, I think a really strong focus on the outcomes in insurance firms, particularly around good prudential functioning and customer outcomes, and doing that through a deepened analysis around how diversity, equity, and inclusion contributes to the high quality leadership, governance, risk management, and culture and conduct within a firm. That whole combination of factors. So it has been really, I think, positive to see how that thinking has begun to take really kind of clear shape. So during this period, I think two real pieces of work building on the stock take that we did last year. Last year we looked at what the activity that was going on both in supervisors and insurers globally. This year we've sort of built on that with 2 pieces of work. One is that piece of work being led by the governance working group, which is looking at, in real terms, the link between diversity, equity, and inclusion, and the way insurers function, and the links between sort of diversity in the workforce and leadership, and achieving good outcomes within those institutions, and those outcomes being in the area, as I said, of the risk management, the conduct, the culture, and the overall governance, and also looking then at sort of the supervisory assessment of that and response to that, and how you kind of get a handle on what's happening in that space. So that's the work of the governance working group. And meanwhile, I think really interestingly as well, the Market Conduct Working Group has been looking at it from the other lens of actually what does it mean for the customer base and the potential customer base if you can see enhanced embedding of diversity, equity, inclusion within the functioning of insurers. And again, of course, with that whole focus on sort of the role of insurance, as we've been discussing, for example, in relation to protection gaps, the contribution that DEI can make to achieving those outcomes for customers and the potential customer base. We had a really good workshop, a really engaged and energized workshop in Seattle during the global seminar, and I want to thank all the stakeholders who took part in that. I certainly, that kind of sharing of perspectives, one learns a lot, even in those kind of 2 short hours. So thanks very much to all who participated in that. Next steps, we will be, the group will be publishing the public consultation on the application papers on those 2 pieces of work that I've just been describing, and that's expected in Q2 next year. And finally, to mention, Jonathan and colleagues, that of course also the work goes on within the IAIS to continue to give effect to and to deepen our own functional commitment to and implementation of diversity and inclusion and equity. And that's both in terms of how we're operating ourselves and sort of looking at the various metrics and functionality we've achieved in that space and described at the AGM this morning, and then also in our public-facing work, so in terms of the seminars and the conferences, and also stakeholder engagement, how we build more diversity, equity, and inclusion into that. So really, I think, positive, progressive past 12 months. Jonathan, back to you.
Excellent. Thanks so much, Jerry, and thanks for joining us early in the morning. Very good. Well, let's open the Q&A now, and we do have a few requests for questions already from the floor. Some from our trade associations, and first up is the trade associations and other stakeholder groups. So the first up is Geneva Association. I think we have Dennis Snoothook with us. Great, thanks, Dennis.
Thank you, Jonathan and EXCO. It's great to be here with you. And it's also great to see that closing protection gaps becomes an increasingly important topic on the agenda of the IAIS. And as you know, this is a topic that has been close to the heart of the Geneva Association for many years. So we look forward to contribute to IAIS work in this regard. Among the main causes of increasing insured losses are accumulating exposures in high-risk areas, and not just climate change itself. How can regulators and supervisors influence other government departments to discourage regulations that promote construction in high-risk areas? I know we'll have a panel on this later on, but I think it is an interesting question for EXCO to already ask. So thank you very much for that.
Shigeru, can I ask you?
Thank you, Dennis, for the very informative question. And first, I'd like to very much thank the Geneva Association to be very much involved in this topic. If you look at the report, and we have discussed this at the PGTF too, but I think there's basically 2 things that supervisors can do in order to address the current challenges on protection gaps. And one is the insurance sort of role with respect to adaptation and risk mitigation, because this is not just about what we can do in terms of narrowing the gap, but actually to narrow the gap, it will be important to reduce policyholders' physical risk exposure to Nat Cat events. So in a sense, that would risk mitigation and adaptation will enable to sort of lower the expected losses are moving forward. So I think that there's a role that the insurers can play in that regard, and it will be very much important for the supervisors to socialize useful and reliable resources of information on Nat Cat events or tools or portals to help the consumers assess their risk. So there's a role for the supervisors to play. And for some supervisors, there may even be a role in publishing information such as flood maps and so forth, which would inform the policyholders of the risks that is accumulating for them. The other part that I think might be important is about the supervisor's role, depending on who you are, the central bank, or if you are a supervisor in the government, to socialize or to sort of interact with the government as a whole. So it's not just the supervisor's role to narrow the gap. So it will be very important for the supervisors to see how the risks is developing in terms of the insurance sector, and to advise and to sometimes could encourage other parts of the governments to be involved in narrowing the gap. And I think such kind of an effort would enable a more multi-stakeholder approach, involving other parts of the government who has some role, other roles to play, and I think that will be very much important as well. For example, relevant to your question could include something like informing policymakers on the area where insurance is unaffordable because of the level of risks. I think that's one thing that could be done. Additionally, you could bring a risk perspective to a range of government activities, such as building homes, housing, urban planning. Those aspects can also be important to lower sort of the expected loss when the Nat Cat does happen. So let me stop here. Thank you very much for your question.
Very good. We also have, do we have another question from yourself as well, Dennis, or? Okay, good. Let's then go to the Global Federation of Insurance Associations, and very happy to have the GIFIA president with us, Susan Neely. Over to you, Susan.
Thank you, Jonathan. I am Susan Neely, president. I have the privilege of being the current president of the Global Federation of Insurance Associations. I'm here with my colleague, our vice president, Tim Grafton, and our members represent 69 countries around the world. On behalf of them, I would say thank you to the immediate past chair, Vicky Saporta, for her leadership and manifold contributions, and congratulations to the new chair, Shigeru Ariizumi. We look forward to providing the private sector collaboration that both you and your Prime Minister reference as part of tackling some of these tough challenges ahead. The question for me is that we reflect on the change in economic conditions that have been talked about over the past 2 years, and the shift away from the ultra-low interest rate environment in many parts of the world that's focused attention from policymakers on the non-bank financial intermediation sector. We feel insurers are often wrongly lumped into the non-bank category that are entities not as highly regulated as we are. And we're concerned as GIFIA that this focus could trigger even more regulatory burdens for the industry. We are working on a paper as GIFIA that explains why insurers are a unique sector. We'll focus on our unique contributions as an industry. And we really, of course, support the need for regulatory attention to focus where the risks are, but also think there could be more credit for what regulators are already doing and what is working well. And we'd appreciate any of your reflections on that question.
Tito, you want to take a stab at that?
Yes, an easy one. Thanks, Susan. It's really a matter of two sides of a coin, I would say. So I think on the one hand, and let me elaborate a little bit on the classification of insurers as NBFI, which indeed you do sometimes see. I think it's very important for everyone around the table, also at IAIS, that we keep our own approach, we keep our own analysis of the insurance sector that recognizes the specificities of the insurance sector and the differences of the insurance sector compared to other financial sectors. And in this respect, I think it's key, and I would fully agree with you on that we need to continue to stress that the insurance sector has its own regulation, and this needs to be recognized. And I think it's a role for all of us as insurance supervisors to continue to do that, because we are involved also in many cross-sectoral policy-making bodies, being it at international, European, or even national level. And it's not always an easy task. Now, on the other side of the coin, if you speak about risk analysis, we do have to recognize that we also have to find ways of plugging in the insurance sector into the entire financial system in trying to understand where the risk emerge and which roles can insurers play. In which cases may they potentially amplify risk. There may also be instances in which the insurance sector mitigates risks. And again, there it's very key for us to understand which unique role the insurance sector plays and try to explain that in all these cross-sectoral financial fora. And to do that, and allow me to stress that again, it is key that we have the data to perform that analysis and to tell our story. So I want to thank also everyone again who participates to the global monitoring exercise, because it's that which allows us to bring the story of the insurance sector and to explain the role of the insurance sector in the cross-sectoral storyline in general. I hope that helps a little bit.
Great, thank you. I know we had another question related to protection gaps, but I'm going to ask that we, we're running a little late, that we save that one for the protection gaps panel, which is coming up very soon this afternoon. And then we move to then the Institute of International Finance. Very good to have you with us, Mary Francis. And I know you have a question for us on climate risk, which I'll ask Daniel to take.
Thank you very much, and thank you very much for having this forum and facilitating this very helpful discussion. And yes, my question is on the climate risk front, and I appreciate, Daniel, the outline of the work program and the timeline, and we also very much appreciate the very proactive engagement and early discussion with industry on a number of these topics, including climate scenario analysis. The question is, how is the IAIS coordinating its work on climate risk with the Financial Stability Board and other sectoral standard setters in order to ensure that there is a insurance perspective clearly reflected? And related to that, how is the IAIS addressing some of the regulatory fragmentation issues that may arise when a number of different standard setters and regulators are advancing guidance, advancing perhaps regulations and rulemakings on the climate risk related front? Thank you.
Yeah, thanks, Mary Francis, for your question. I guess first off, from representing the IAIS, we are really grateful for the discussion and the input we have received from all stakeholders as part of our climate work. So many thanks for that. In fact, I distinctly remember at the very recent climate risk scenario analysis workstream, the IIF gave very good insights about the importance of choosing the right climate and net cat projection models. So we really want to thank you for that input, because we do love the, not just the, from a federation point of view, but also the on-the-ground insurer experience, and your views are really very welcome. When the CRSG was formed a little over 2+ years now, we set out 3 work streams, right? Regulatory requirements and supervisory guidance, as I already mentioned, climate scenario analysis, as well as the 3rd work stream on climate data collection. So, as I already mentioned, some months back, we opened a new front by having a work stream exploring climate disclosures. So, these 4 areas, in my mind, form an interdependent approach towards the IAIS efforts in helping our members and ultimately insurers deal with climate-related risks. Serendipitously, our comprehensive approach dovetailed very nicely when the FSB came up with its climate roadmap, which we also helped contribute to and help shape. So these 4 building blocks are at the Financial Stability Board, namely Block 1, disclosures, data, vulnerability analysis, and regulatory and supervisory practices and tools. So these were the 4 blocks, and our approach at the IAIS dovetailed very nicely with them. I've effectively, in my previous remarks, I've already mentioned the work we are doing on disclosures, data, and on vulnerability analysis, which in fact is scenario analysis. So what I want to highlight is on Block 4, which is on regulatory and supervisory practices and tools, which Mary, you also alluded to. So following a gap analysis which we finished last year, at the CRSG, we are developing a comprehensive supervisory response to climate risk. And these are spread out over multiple consultations. In effect, we are going to make some small updates to certain insurance core principles and also on ICP-related guidance. And we are going to wholeheartedly develop further supporting material to make it more explicit that insurance supervisors should require and work with their insurers to incorporate climate-related risks into their governance and their operations. So next year, I've also mentioned this, after considering the responses from the various packages of consultations that we'll come up with, and I really invite everyone to provide feedback, we will hope to publish a comprehensive package of material on updated ICP guidance and an updated application material that provides a roadmap for insurance supervisors to address climate risk. And be rest assured that we work very, very closely with our colleagues at the other standard setting bodies. IAIS will continue to bring the insurance sector supervisory perspective to the climate-related work at the FSB and at some of our counterpart agencies. So we really look forward to you providing your views, and then we in turn can reflect some of your considerations into the supervisory issues that are discussed at these standard setting bodies.
Thank you very much. And then lastly, I know we have a question from another one of our partners, the International Actuarial Association. I think we have Roseanne with us. Thank you, Roseanne.
No, it's on. Okay. I'll say that again. I'm Roseanne Harris. I'm immediate past president of the International Actuarial Association. And thank you so much for the opportunity to ask a question in this session today, and also for the roundtable session that we had this morning, which we were really pleased how well attended it was. So our question is around risk-based capital, and it actually follows from the discussions we had this morning, where we heard about an update on the excellent work that's being done by the Access to Insurance Initiative around building capacity amongst supervisors. But we've certainly heard about the move now to implementation, and so the question is around ensuring, how do we ensure that there are sufficient suitably trained supervisors to deal with the technicalities of the risk-based capital implementation? Thank you.
Thanks. Peter, I know that's something close to the heart of the Implementation and Assessment Committee. You want to talk to that?
Yeah, thanks. Very, very close to our heart. And a question that keeps us awake for quite some time now. I think first it's very important to mention that what in the introduction to our supervisory material, the ICP introduction, the actuarial capacity is mentioned as a main supporting element of achieving effective regulatory regimes and supervisory frameworks. So the problem is that where we do not have effective actuarial capacity, that turns up in many ICPs, in many assessments, and then it's very difficult to make further progress. It also hinders financial inclusion, because even if the inclusive products would be there, it would be difficult having a lack of actuarial capacity to further develop that in the market. So that would hinder it. I want to mention that we have in place this wonderful agreement among the IAIS, the IAA and the HYI on actuarial capacity building, which we started in 2017, and it did not only survive COVID, it even strengthened the way of developing new formats to deliver the programs. And we will continue. We have renewed this, and many thanks to our partners, for another 5 years, expanding to according to the demands that we have, huge demands that we have there, expanding geographically, but also as regards the languages in which these programs will be delivered. And the Risk-Based Solvency Implementation Forum itself is also developing capacity building through its and the technical aspects and challenges of implementing such a regime. So through encouraging the peer learning and case studies, and I'm pretty confident that also from that angle we will be able to further support that. But just to stress again, this is really a key question to achieve ultimately what you want to achieve, globally consistent, effective supervision of all the insurance markets. Thank you.
Thanks very much, Peter. And I think before we end, I do want to take one sort of general question from the floor. I go with the one who put the hand up first, earliest. Yoshi, it would be a little bit remiss of me whilst we're in Tokyo not to give the microphone to the former Secretary General.
Thank you, Jonathan, and the OECD Chair of Insurance and Private Pension. My question is addressed to Vicky. First of all, before addressing Vicky, with everybody here, we really heartfelt thank you for 8-year, contribution to this huge organization, ICS development, horizontal framework, to name the few. Thanks to you, ICIS flies. My question to you is, for these 8 years, what's your most memorable moment of the IAIS? And that's first question. And second question, if you could start the chairmanship now, that you returned that time capsule and 8 years ago, what you could do differently? 2 questions.
Thank you, Yoshi. Goodness, very hard questions. So let me think. What is my most memorable moment? There's so many. Well, I guess it's probably when we all got and forged agreement in the annual conference in Abu Dhabi in 2019, when we adopted the ComFrame, and we also forged agreement on the way forward with ICS. We're all sitting, ExCo members, on this platform, and we were united. I can see actually some members were here in forging agreement forward, and that then plotted the path that we have been traveling. So that kind of moment where it all came together and we were united in harmony and moved forward. Gosh, je ne regrette de rien. But what would have I done differently? If I was starting my chair then again, looking backwards and reflecting on it. What would I have done differently? I mean, to be frank, I do think that I had a bit of a vision of this, and I sort of plotted a chart, and it has come. Whether that vision was a correct one, I think it was at this time. Maybe I've actually sort of I have become extremely convinced of the inclusive nature of this association. And it's something actually, Yoshi, that we had discussed when you were Secretary General, because it is different than the Basel Committee, on which I'm a member and I continue to be in my new role, and also the FSB. I guess one of the lessons was learned. I mean, I was very, very focused on, and I think it was the right thing, on, on getting a way forward for standards for internationally active insurance groups that, of course, involve the largest jurisdictions. And I still believe that this was right at the time. And I'm also very proud of the governance reforms we had at EXCO that ensure that the large jurisdictions are always there, because it's very, very difficult to agree standards and expect jurisdictions to implement them when they're not around the table and when they have 90% of the premium. So all of that, I really believe then, and I believe now. But given my background and where I had worked, I perhaps underestimated earlier on that the huge importance and value that this association brings to all markets, and the value of the inclusion, but also the value that the association gets from it. That we all become richer, particularly in a world where quite a lot of the technologies and the innovation does not necessarily come from the usual suspects. But I've now learned my lesson, and in my latter part, I did some things in this area, but maybe I should have started a bit earlier. Thanks.
Well, I think we could have gone on a while. There's so much to discuss, but I think I will be fired as moderator next year in not keeping to time. I know there is coffee. I want to thank a great panel of EXCO leaders. We got some very good questions in the Slido as well, which we couldn't get to all of them. We will try deal with them offline through our newsletter or our website. More opportunities for dialogue and two-way exchange on many of these important topics come in the 8 roundtables that we have today, tomorrow. So please also make use of that. And with that, I think I hand over back to our MC, and a big thank you to the panel.